Okay, hello everyone. This is Zach here from XIFU, and together with me today, we have Dato Yu. All right. So before I start my section over here, if you are here, appreciate if you can help me to click the like buttons for me and help us to share this out. Okay, so that we can reach more people. Right. So before we start again, I just want to do a quick disclaimer over here. This section here, we are not doing any buy and sell call. Before you decided to trade any stocks based on our discussion in this section over here, make sure you have your own trading plan. If not, get advice from professional. Right now, before I start, just wanted to do a quick intro, okay, about our special so-called speakers here today. This is actually Dato Yu from i4 Value. He actually is uh, writings, blogs in i4 Value regarding value investing. And of course, for those that who know, we actually have this new features, fundamental mapper in our XIFU app. For those that who don't know, don't worry. Later on, Dato will definitely share with you in more details how you're going to use it, especially if you want to, do something like mid to long term investing. All right. So now, without further ado, now it's already 8:30. I would like to pass the floor to Dato to start our section for tonight.
Okay, I will take about 5 minutes to give you an overview of the fundamental mapper. The logic behind the fundamental mapper. Okay, I'm going to tell you this sad story. I'm a long-term value investor. Okay, in the sense that I buy and invest in companies based on business fundamentals, and that requires every company before I buy requires me to actually do what I call a in-depth fundamental analysis. So you go in, you look at the business prospects, you do a valuation, and then you compare the business value with the market price, and then on that basis you decide whether it is a good or bad investment. Okay, so I've been doing this for about 20 years, and the sad thing, I use the word sad thing, is because I have difficulty trying to get my children to adopt this investing style. Okay? Because they keep saying, wow, to do this fundamental investing you need to spend time and so on. So I figured that if we can create a system, I use the word, okay, if we can create something that enables a layman to look at all the stocks available and say, these are the ones that have a good business prospects, it is cheap from a fundamental perspective, they can then use this to go and build up their portfolio. So that's the idea behind the fundamental mapper. It is meant for if the layman who would want to spend time doing their own fundamental analysis to be able to look at it and say, the companies in this particular area, these are the ones that is safe, and this is the one that good business prospects. So that's the idea behind the fundamental mapper. Now, as I said, the fundamental mapper focuses on fundamental analysis. So if you're a Malaysian investor, okay, probably more than half of you are going to buy based on technical, okay, price action. Okay, I used to do that when I was young, okay. Unfortunately, I have not been able to make money because I keep seeing signals when there's none, and every time you buy, and you sell, at the end of the day, you don't really make that. And so over the years, I decided to change the investing style to move from technical to fundamentals. And the result is that there are certain advantages with fundamentals, but the biggest advantage is that it is something that you buy and then you forget and you don't worry about it. Okay? That's called long-term investing. Now, in addition to, for people who don't have any idea on how to invest, the best, of course, is go and buy the index. Okay, and that's what I would recommend to people to come in first time, put your money into the index, and then as you learn how to invest, you slowly shift your money from the index to either your technical or your fundamental portfolio. Now, in between the indexing and the technical and fundamental, there's another thing called factor investing, which again sounds very nice. And what factor investing does is that you identify the factors that is going to drive the stock price, and then you invest in these companies with these factors. Sounds very nice theoretically, and I play with it as well. The problem is that the factors that drive stock price this year is different from the factors that drove the stock price last year, and what is going to drive stock price the next coming months will differ. So trying to predict the factor is also another big challenge. So at the end of the day, and basically because of my business background, I spend most of my time then on fundamental analysis. Now, when you look at fundamental analysis, there are basically two questions that you ask. Okay, the first is this a good company? And then the second one, is it a good investment? A good company is one where the business prospects are good. A good investment is one that enables you to make money. So it doesn't mean that you have a good company, you can make money, because if you buy the good company at a very expensive price, there's no way you're going to make money. If you're good enough, you can also buy a bad company, but if you buy it at a very good price, you can also make good money. So I differentiate between a good company and a good investment. And as you will see later, the fundamental mapper is based on these two questions. Is it a good company? Is it a good investment? So when we look at whether a company is good, we look at what we call the business prospects. We look at the profitability, you look at the growth runway, you look at the risks, you look at the business model, and you try to form a picture of where the company was going to be for the next 5 to 10 years. Unfortunately, this requires you to understand a bit about the business, the industry, and the message from Warren Buffett, who does these things, is that you cannot know all the sectors in the country. So you pick the ones that you're familiar with, you focus on it, and you develop your expertise in that particular area. So in business analysis, that's my advice to everybody else as well, that you cannot go and buy all the sectors, because you don't know, you can never know enough of all the sectors. But once you are familiar with the sector, you can then look at the company and then understand quickly whether this is good or bad. Okay? And again, when we design the fundamental mapper, we work on a sector basis, because the business relative, each sector have slightly different business characteristics. So when you can compare companies within the sector, you can have a very good picture of how they will perform. So that's one dimension. Now, the other dimension is estimating the business value. And without going too much into the theory behind it, the simplest way, of course, is to use multiples. Now, I don't use multiples, basically because I don't think multiples will give you a what I call a objective value of the company. You see, every company makes money, and the theory is that if you can project the money they make over its life, you can then determine the value of the business. Okay? But unfortunately, of course, that requires you to understand the business, how the business works. Then you need to develop the financial models, and then you build in a whole set of assumptions, based on your valuation. So the business model and the assumptions you use is dependent on your business analysis as well. So they are linked in that sense. So if you don't know how to do a business analysis, then your valuation is going to be terrible. Okay? But if you have a good understanding of the business, then you can make the correct assumptions or realistic assumptions. And when you build a model, your projection will be much more realistic than doing a wild guess. So these two parameters, what I call the business model and the, sorry, I can't get my, sorry, I lost my slide. Okay. Yeah. Okay. I have a problem with my slides because it's not reading the other 3 slides.
Sorry, Dato, do you need helps?
Yeah, how do I, because it only
You want to
stops at
change your
slide
slide,
4.
is it?
Yeah.
Okay,
Do
maybe
I
you can click on present and then you share sorry, you click on present, share screen. Then, or maybe you choose the entire screen so that you can show everything from your screen.
share screen? Do you see it?
Okay, sorry about that. I think we lost Dato. Okay, probably give me a 1 minute, okay, so that we can actually bring back the slides here. Now, meanwhile, if let's say you got any questions, okay, feel free to comments below. Later on, of course, we have some Q&A and case study as well. If you want to look into some stocks or some counters, okay, comments below. We'll definitely share with you more details later on. Okay, I think Dato is back already.
Yeah, sorry.
Okay, no worry, Dato. Okay, so okay, this is the previous slides, right?
Yeah, I don't know why it stops halfway. So how do I share my screen?
Okay, you click on present, share
Okay,
screen.
share screen.
Okay, what you do, I think you can click on the entire screen so that whenever that display on your screen, right, it will show in our screen later on.
It says select entire screen. Okay.
Yeah.
So do you see it?
Wait, let me add back. It's still the same, Dato, you able to share?
Yeah. Do you see anything? You don't see anything. You can't see my. Can you see my slides? Ta-da.
The previous slides. It's only the previous slides.
Ta-da. Ta-da.
Or maybe what you can do is that you can click on window. You can try click on share your screen and then you click on window to see whether is there any things that you can share or not from your side there.
See
Okay.
it?
Is this the one?
Yeah. So you can
Oh,
see it.
okay.
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 Okay. Sorry, guys. Okay. I won't go into, yeah, this is what I said earlier. Okay. Now the more important thing is that we created this fundamental mapper to answer these 2 questions. So the first one is we look at the business performance and we compare the companies within the sector. Okay. So on the left is what I call poor performance. On the right is the best performance. And each dot represents one company. So if you look at from left to right, okay, the dots on the left are the worst performing companies. The dot on the right would be the best performing companies. Okay, and they are scaled in that manner. So you have what I call the business fundamental axis, okay, which is the horizontal one, and on the other vertical axis, we have what I call my investment risk. So that means I compare the business value or the intrinsic value with the market price. So for example, if let's say the market price is $1 and you estimated that the business value is $1.30, then I would say I have a 30% margin of safety. If the market price is $2 and my business value is only $1, then I have a negative intrinsic value, which means that it is more risky. So for each company, we then determine the relative value, okay, the business value compared with the market price, and then we adjust it on the vertical scale. So the dots on the top are the companies where the market price far exceeds the business value. I mean, this is a very risky investment. The bottom of the chart are the ones where the market price is so much smaller than the business value that we think that it is a low risk investment. So we have these two axes, okay? The investment risk and the business performance. Now, as a fundamental investor, okay, the whole idea is that every company that you analyze, you then assess where it stands, from a business performance point, whether it is a poor company or a good company, and then you assess whether, from a investment risk perspective, comparing the business value with the market value, whether it is a high risk investment or a low risk investment. So these are the two dimensions that I normally look at, okay, on a company to company basis. Now, in the fundamental mapper, what we do is that we do it for all the companies in the stock market, and we do it sector by sector, so that not only do you get a picture of one company, okay, you get for example, here you can see how the companies are within the sector are distributed from both a business performance and a business risk perspective. Now, the fundamental mapper, we divide it into 4 quadrants. So the bottom right quadrant, we call it the gold mine. And this is the one where it is the best performing company in the sector with the lowest investment risk. Okay. The other quadrant, which is the top right-hand corner, is the one where the business fundamentals are good, but unfortunately, the market price is much more higher than the business value. So I consider it a much more risky investment. Then the other quadrant, of course, is the one on the left-hand bottom, where the business fundamentals are not so good, but it is relatively cheap. Okay, so it's a low investment price, and the reason why this happens is because the business has not been performing well for the past couple of years. Maybe the market thinks that they're not going to do well, so nobody's buying it, and the stock price comes down, so it becomes very cheap. And of course, finally, we then have the top left-hand corner, which we call the quicksand, which is lousy company, very high risk. Okay? So the idea is that if you're a layman and you don't have time and you don't want to worry about where to look for, then you hunt for companies in the gold mine quadrant. So imagine that if you're going to have a portfolio, or let's say of 20 stocks, and you want one stock for each sector, then you're going to look and select 20 sectors. And for each sector, you look for a company in the gold mine quadrant and you pick up the portfolio that way. So this is what I call a no-brainer fundamental analysis way of investing. Now, the challenge with this sort of investing is business fundamentals do not change weekly, does not change monthly. It doesn't even change, over a 1 or 2 year period. Okay, so a company that is in a good performing company doesn't become bad overnight. Okay, it will slowly drift, from good to bad, and you can see it happening now. Similarly, a company who is poor performing, it doesn't overnight. Most of them don't overnight become a fantastic performer, but it will take time for them to turn around. Okay, and you can actually see it happening, over a 2 to 3 year period. But on the other hand, market prices changes every day, so the vertical position can change, very quickly, because if the market is hot, all the prices goes up, shoot up straight away. Then from low risk, it becomes a high risk. So the idea is that if you invest in companies in the gold mine quadrant, and you give yourself a 5-year investment horizon, there's a very good chance that eventually they will all become expensive. And then when they move up, so it means when the gold mine becomes a gem or a gold mine becomes a quicksand, you sell. Okay. So we answer two fundamental questions, what to buy, okay, and then when to sell. Okay, because once you have bought it, when it moves into the high investment risk area, then you quit now. You sell it off, and then you go look for other cheaper stocks. And that's the theory behind the fundamental analysis. So the whole idea of the fundamental mapper is to create what I call a picture where you can look and understand where the companies in the sector fall. And then if you are not skilled enough, you just focus on the gold mine. If you imagine when you're looking at charts and so on, I would say that this is the analogy of the charts, but from a fundamental perspective. It gives you a picture of the companies within the sector, okay, in terms of business performance and in terms of business risk. Now, in the system, when we design this fundamental mapper, what we do is that because the business results are released quarterly, we reevaluate the business performance on a quarterly basis, but we reevaluate the investment risk on a daily basis because market prices changes every day. So the horizontal movement, okay, moving from left to right, you probably only see the movement quarterly, whereas the movement from bottom to top, depending on the market, it can happen daily. Okay. But the idea is that if you're looking for stocks to hold for the long term and you don't know enough, then I say just focus on the gold mine quadrant. Okay. Pick one company for each sector and you build up your portfolio in that manner. Okay. Again, it is I guess you can call it an investment tool that we created to help people identify strong companies and strong investment very quickly without going and doing the detailed analysis yourself. Because what we have done is that we have used an algorithm and used the computer to actually generate all the data, track the various things, and do all the various calculations. We started working on this almost a year ago, okay? And it took us a year to check on it, to iron out most of the bugs and so on. I would still consider this a beta stage because there's still a few other sectors that we have not tackled yet. But we are hoping that hopefully within the next 1 or 2 months, we would cover the other companies that we are not covering at this point in time. So I think as Zach will tell you, if you go to your company analysis, in XIFU, there's sometimes you don't see this chart, sometimes you see it as a spider web. Okay. And it means that we have not covered that particular sector yet, or that particular company. Okay, so basically that's the concept behind the fundamental mapper. I think I would like to spend the time answering questions, both
Sure,
in terms
Dato'.
of fundamental investing and what else you can do.
Sure. Or Dato', do you got any case study you want to show, or you want to answer some question first?
Answer some question first, I think, this year, because
Okay. Okay, I think currently I only got one question, and this is from Bear Son. He said that what is the good stock to buy now?
Okay. If you can go to your fundamental mapper.
Okay, I probably I show the fundamental mapper on my side,
Yeah.
Dato'.
Yeah.
Okay, just give
just show
me
one them.
minutes.
Okay. If you want a safe investment, then look for stocks in the gold mine quadrant.
Okay, hopefully you can see the screen.
Yeah.
Okay, probably I just show first from the
Okay.
from the homepage. So for those that who don't know, again, you can actually download XIFU apps. Log in, register yourself. If let's say you are a user already, you can access this for free. And in fact, for fundamental mapper, even though you are a free user, you actually can use it. I think we opened up for 6 months, okay, for our user to try out, okay, fundamental mapper. So okay, for example, what you do, this is the homepage of XIFU apps. Dato', any stock that you want me to search for today?
Well, search CSC. Okay. CSC Steel.
CSC Steel. Okay, we go to CSC Steel, and actually it will bring you to CST Steel page info. So this page info actually consists of 5 market depths. Of course, we have intraday live chart also when you click on the X chart. And going down over here, this is the fundamental mapper. So this is the part that I probably leave it to you, Dato, to explain further.
Okay. So this one shows you the stocks within the iron, effectively, basically the metal sector, which is basically the bulk of it are going to be iron and steel companies. So if you have your XIFU app live, okay, if you click on the dot, you can see the name of the company coming out. Okay, so and these are all the companies within the sector. And what I said is that the rightmost company, okay, can you see what's the rightmost company? This one here, okay.
Yeah.
So
CA.
yeah. So from this perspective, the company to the rightmost is the one with the best performance relative to the other companies in the sector. Okay, so this is the best from a business performance perspective. And the way we assess the business performance is we look at the past 6 years of performance. We look at revenue growth, we look at profitability, we look at investment to continue to fund the growth, and we look at business risk and so on. And so this company is the best. So those companies to the right will be the best performance compared to all the other companies. Now the companies to the left, okay, and you click which company here, okay? So this company will be the one which has the worst business fundamentals. Okay. So that will give you the picture of where the companies are in terms of, so the left to right will give you the business fundamentals. Now, why I say this quadrant, okay, is because the gold mine quadrant is the ones where not only is it the best business fundamentals, it is the one where the market price is lower than the business value. So to give you an example, if let's say the market price is $1, it is likely that the computed business value is going to be $1.50 or $2. And the theory behind it is that because the business value is higher than the market price, eventually the market will realize that, hey, this stock is undervalued and the price will go up. Okay, especially if it is a good company. So that's the theory behind fundamental investing. Okay, that you believe, or as a fundamental investor, we believe that they are mispricing the market. Okay, and eventually the market will realize its mistake, and then everybody will buy the stocks, and then the price will go up. The only thing I can't tell you is I don't know whether this will take 1 year or 1 week or 6 months for the company to realize the undervaluation. I would say that based on Bursa Malaysia, okay, this is my Bursa Malaysia experience. Out of the 100 companies that I've bought over 20 years, maybe less than 10%, the price move within 6 months. Okay, the average will be at least 3 to 4 years. So it is a long-term investment strategy. But the good thing is that if you buy companies in the gold mine quadrant, these are the best companies in the sector. So it is unlikely for them to disappear, within the next 3 to 4 years. Okay, so that's the idea behind buying sound companies. Now, like I said before, if you want to know which company to buy, then identify the rightmost company. Sorry, the company which is most to the right and most to the bottom. Okay, the most southeast company. That's the one that I would say gives you the best prospects and the best investment risk.
Okay.
Okay, so you you should not go and buy the 3 to 4 companies within the sector. Okay, it doesn't make sense. Okay, from a risk management perspective, okay, if you buy one, select the best one company in the better sector, and then you go to the next sector and then pick up another company, and you build up your portfolio of 20 to 30 stocks in this manner. Because I think we cover more than 20 to 30 sectors. So all you do is make sure that you don't have a concentrated portfolio, of all in one sector, because the nature of the economy is different sectors responds to different economic situations. So you cannot tell which sector suddenly be good or bad. And so for example, I mean, I've been in the property sector for 20 years, and the property market has been down for what? Since 2018. So every year we say it's going to go back, but it's not. So the property sector has been down for about 6 to 8 years. Okay. So from so it might be a good company, but if the prospects or the market is bad, the price is not going to move, unfortunately.
Yeah. Okay. I think probably I want to add on something Dato, because like for example, Bear's not asking right how long is to wait, but like just now Dato also mentioned for fundamental mapper, we're actually looking into more like value investing, which is probably we are looking something long term, like Dato said, probably someone that want to build a portfolio for 3-4 years down the road. So one thing is that I think we can do is that maybe for those that who are in technical analysis, you can actually check out using the weekly chart as well to check whether is it a good time, okay, for you to see whether the setup is okay or not, right, before you want to decide, okay, which one to enter. Or probably that though, why we do this, okay, because I think Besan also mentioned, right, property and construction is good now. I saw some analysts say maybe we do a 1 FM for property sectors for tonight before we end our section. Is it okay?
Yeah, can.
Okay.
You
Any construction stocks that you want me to search, Dato?
do property. Go and look at Crescendo.
Crescendo. Okay.
Yeah, CRES. Okay. Now, for those of you who may not be familiar with Crescendo, this is a Johor-based property developer, okay, it's probably you probably find out it's too expensive at the moment. But this is a Johor-based property developer, and the stocks took off 6 to a year ago because Johor suddenly became a hot property area for data centers, and they were lucky. I think it's the word I would use. Yeah, okay, to own land around the Iskandar area, around the southern part of Johor, and suddenly, their properties were hotcakes, lah. Okay, so if you look at the fundamental mapper, okay, you find out that you can't make it. Okay. You find out that you can find out that actually from a property development perspective, okay, they are basically an average performance, lah. Okay, they're somewhere. If you see the distribution of dots, okay, I think I can't see. They don't even fall into the gold mine quadrant. They have shifted already.
Yeah, turnover currently.
Yeah.
Turnover.
Okay. Yeah. So when you look at the distribution of sectors, you find out that all the companies are close together. Okay. You don't see a market leader. If there was a market leader in terms of business performance, you will see 1 or 2 dots more or less to the right, that's far away from everybody else. Okay. If you see that, that's the one that you focus on. Okay. For those of you looking at what to buy, because they are really what I call outstanding guys in terms of business performance over a 5-year period. Okay. When we talk about business performance, like I said, business performance does not change daily, weekly, or even monthly. Okay. So we look at the trends for the past 6 years, and when it is ranked, when it is the most, the company the most to the right, that means his performance for the past 6 years has been the best among all of them, consistently, Okay. So if you find somebody who is actually standing alone to the right, okay, and it is still the market has not recognized its value, that's the one that you probably want to go and dig further and say, hey, this is the one that should be in my portfolio now.
Okay, Dato, can I say that this is the one that currently is the best? If let's say I really want to choose from the gold mine sectors. This one.
Can you see? Yeah. Yeah. Like I said, the theory is the most southeast dot. That's what it is.
Okay.
It should be the best performance and the lowest investment risk. The way the fundamental mapper maps that, because we have a cut-off point in terms of the risk. So when you see the top and the bottom, sometimes you see them all in a row because we have a cut-off point on the point. That's why they all, sometimes at the top you see all in one row, or the left all in one column, or the right all in column, is because we have a cut-off point in trying to put all the companies onto one chart. Okay, but the theory is the same, that the companies who are undervalued at the moment, but still business prospects are the one with in the southeast corner. Southeast corner. So by color, okay. Then the one in the northwest is the most risky. The other way.
Northwest. Centora.
No.
The top one.
Northwest.
Okay.
Top, but okay. That would be the most risky, relative, both in terms of price and in terms of business performance.
Okay. Okay, any question from the floor? Okay, so for bear side, don't worry. I think we welcome questions. Again, because this section here, we are more into value investing. So definitely, for those who are looking for short-term, probably, probably you find something pretty new, but don't worry. Okay, we do welcome comments. Okay, this is for bear side. Okay, any questions from the audience before we end our sections for tonight? Or Dato, you got anything to add on?
Can you show them the one that I did just now on accent? So what do you do? Yeah. Okay.
Yeah, I think we go to media. Okay, for those who want to follow some of the ideas from we are not doing buy and sell call, but just sharing ideas. What you do is that you can go to XIFU apps, okay, go to media, and then you go to opinions. So this is some of the opinion that's how user will post it, including Dato you. Okay, this you can look for a user called I4 value. So when you click here, okay, the article pieces will appear. Okay, sorry, my line is a bit slow in my room.
I wanted you the participants to look at this, because what I normally do is that
Okay.
the you show the three charts that you see there are three
Yeah.
charts in fundamental mapper
Mm.
that if you're going to be a serious investor, okay, you should look at the three charts, because the three charts are there already. Okay,
Hey, do you able to see the chart, Dato?
I can't see. So
Hey. Okay. Yeah. The
you
thing
can show
hang
chart, but
already. You want to show accent only, right?
you can if not, you just show that you go to Excel and show the three charts. I think it's easier.
The link that you sent to me, right?
No, if you can do that, if not, you can go to the Excel company and then you show them the each of the three charts that I take it from.
Okay, wait now, give me a second. I think my so-called my phone is hang already. Okay, so I just gonna switch my screen again.
Okay, you see the main driver, of course, is the fundamental mapper. It shows you the relative business performance and I will use the word relative business risk. Okay. Now, the way I would use the fundamental mapper, is not just look at the relative position, because the relative position gives you the picture of okay. You see, these are the three charts that you can get from XIFU itself. On the right is the fundamental mapper. On the left is the what I call the P&L chart. Okay, and the center is the price action chart, for one of a better word. Okay, so what I do is that I look for companies on the gold mine quadrant. Okay, and then I look at because the gold mine quadrant, you see the way we have presented it is relative, what I call relative business performance. So if all the sector is doing terribly, you still have this picture. You still have the best company among the worst. Okay. Okay. So it is a relative chart. Okay. So I use the chart on the left to look at the revenue and to look at the profits. So if I see that the best performance has a terrible profit and so on, I know that this is a terrible sector. So you must look at it, because the chart on the right shows you the business performance in a relative sense. If the sector for example, all make losses, but one company makes $1 profit, then of course you'll be to the best performing company. Okay, so before you commit to buying company in the sector, look at the P&L chart, which is shown on the left, and see that actually this company, which is the best performing, actually delivers good profits. Okay, at least you know that this is consistent, so that is the best performance in the relative sense, but the actual profits are also there. Okay, so I will look at both. Okay, now I'm not a technical guy, but what I do is once I've identified the company and say, hey, this company ABC is a good company, then I look at the charts to say, do I buy today? Do I buy in 1 month's time? Do I buy in 3 weeks' time? Okay, that's where the technical comes in. The technical gives you the entry. You look for the pullback to buy. That's how I relate it. So think of the fundamental as giving you what to buy. Think of the central chart, okay, which is from XIFU, to tell you, hey, how do I time my purchase?
Yeah, I think that's a very good one. Using TA for timing, right, Dato?
Okay, you don't, because
Yeah.
business performance don't change, okay, overnight. Okay, so you can have, okay, when I identify a company to buy, I don't buy all one shot one. Okay, so the once I identify, for example, identify this company I want to buy, I buy, and let's say I put 10% of money in just to get the entry in, then I spread my purchases sometimes over 6 month period, and I look at the charts now, because they always pull. Okay, for those who does a lot of technical, there's always pullback one. Okay, so you wait for the pullback, and again it comes back to patience lah. So these three charts, even if you're a fundamental investor, the central chart is an important one because it tells you when to buy, when to sell. Okay, but you don't have to be an expert in drawing a lot of clever things lah. You look at the price trends, or I look at moving averages actually lah. Okay, and it gives you a good picture of when of timing now. But the first step is look at the left chart and the right chart, because the right chart tells you is the best company relative to the sector. You confirm it with the actual numbers and say, hey, okay, if this is the best company and the best company actually don't make a lot of money, then this is a terrible sector. I don't want to go into this sector.
Okay. Okay, thank you, Dato. Any questions from the floor regarding fundamental mapper? Okay, let me just remove my screen here. Okay, if let's say there's no questions, okay, I think we will end our sections for tonight. We will also have another section again next week to share with more about fundamental mapper. All right, so Dato, anything before we end?
Nope. Just that if you don't have time, okay, and you want to have more certainty in investment, then I would suggest that fundamental analysis investing is the way to go lah. Okay? Because you don't have to. Once you buy the stock, you don't have to worry about it every day. Okay, you buy and then you can go to sleep, and then look at it every couple of months, just to make sure that
for those
it's
that
still
want
there.
to build a long-term portfolio, right, Dato?
Yeah.
Okay, so once again, thank you, Dato, for joining us for tonight. Definitely, this is not the last section with Dato. We're going to have more series coming in with Dato to show you more about value investing. So with this, once again, thank you, Dato. Thank you for those who are joining us on Facebook, and we'll see you again next week.